Hello, let's take a look at my bearish and bullish scenarios for Bitcoin, starting on the 1 hour chart. So here is the bullish scenario where we're counting this as a wave 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, 3, 4, 5, 3, 4, 5 to a 3, to a 4, to a 5, to a 3, 4, 5, and so on, looking for higher prices. The other bullish scenario is that we are counting this the same way, basically 1, 2, 1, WXY in a wave 2, and then 1, 2, 3, 4, 5 to a wave 1, 2, 3, 4, 5, and so on, basically missing a 1, 2. The bearish scenarios are these. So here we have wave A, B, C to a W, A, B, C, D, E to a triangle in a finishing a wave X, and now we are working on 1, 2, 3, 4, 5 to a wave A, B, and now a finishing wave C to finish wave Y. And the other bearish scenario is that we have a finished wave Y already. So A, B, C, W, X, A, B, C to a wave Y. So what are the probabilities for all of these scenarios? Which one have the highest probability? You gotta take into consider the bigger picture, but if we just solely focus on these ones, this is a double zigzag like this. So here wave X is a bit short in time, as you can see. We didn't hit the 38.2, which lowers the probability. And also wave B here is over 6 times the fib length of wave A, which lowers the probability, which lowers in turns the probability of this being finished. It becomes lower basically. If we move on to the bullish scenarios, so 1, 2, 1, 2, 1, 2, 1, 2, I mean, all of these 1, 2s, you don't want to have so many. You want to have an explosive 3, and we haven't really gotten an explosive 3 except this one. But this 3 cannot really be part of 1, 2, 3 like that, because it is so short in comparison. So you can see here we didn't hit the 161.8, which is a very common target for a wave 3. So therefore this doesn't really have the highest probability of being something else than a 1, 2, 1, 2, 1, 2, 1, 2, and so on. So yeah, it hasn't really the highest probabilities. And also this one, 1, 2, 1, 2, this 2 is so lengthy. So you can see here it's it's okay in terms of this wave 1 to this wave 2, but in terms of this 1, 2, you don't really want the second 1, 2, and so on to be longer or deeper than the first 1, 2, and this is considerably. You can see here 1, 2, and then we have 1, 2. This is so much bigger than this one, and that's not really what you want to see in a 1, 2. So therefore, this has the bigger probability right now, the highest one. So A, B, C to a W, and then a triangle here to a wave X, and now we are working on basically A, B, C to a Y. It very much depends on this structure, if this is a 3-wave or if it's a motive wave down. If this is a motive wave down and we take out the low, I mean, of course, this has the highest probability, but right now with the information given, this has a bit more higher probability. But yeah, you gotta wait and see to let the market show you basically more clues as to where we are. And it's very important also to know where we are, speaking of that. So this is the bigger picture, the move down. So if I zoom out here, you can see that we are dealing with this. So we are counting a wave 1, 2, 1, 2, and now 1, 2, 3, 4, 5 to a wave 3, and now WXY to a green wave 4, and so on, looking for lower prices. So you got to take that into consideration as well. And the invalidation for this scenario is here at, I have 2 invalidation lines. So that is because if you take wave 4, you don't want to hit the 61.8. You can see here that here is the 61.8, the invalidation. But if we take log scale, then the 61.8 moves down to this. So here is the invalidation for log 96294, and here is the invalidation for the normal, so 97201. It's a bit of a in-between kind of scenario right now if you use log scale or not, because of how much Bitcoin has moved. So it's better to be safe than sorry. So basically the invalidation, I would say, is this one, not on the log scale. And also, if you break this channel, which we have taken from here, you can see this channel 1, 2, and we broke out here. You don't want to break this channel. So if we move on here out of this channel and invalidate this, this has a very low probability of being corrective and have a higher probability of being impulsive and going up, basically. But if, as long as we stay in this channel, not breaking it, and below these lines, especially this one, this has a higher probability of being corrective, meaning it has a higher probability of taking the low once again. And also I want to show you, this is also an important thing. So if we take a channel here and take it from this pivot to here, and then move it down to this, and then we use the acceleration channel, you can see that the whole structure fits very nicely inside of this, in this channel. And as long as it does that, it also has a high probability of being corrective. So as long as we don't get a move up through this channel, and also not up through the other channel. So we don't want to break this channel, and we don't want to break this channel and this pivots. So as long as we stay here, not breaking this or taking out this has a higher probability of being correcting, and we are moving down, taking the low once again. So that was basically it. Take a look at the current price action here on the lower time frames. Is it corrective or is it impulsive? If this is a 3-wave or a motive wave. If it is a motive wave, we want to see a clear 5-wave structure. So 1, 2, 3, 4, 5, 1, 2, 3, and then we go deeper. And if it's a motive wave like that, the probabilities are higher that we have a finished wave Y. If it's not a motive wave, then it's high probability that we are not finished with just yet with the double zigzag. Yeah, that was pretty much it once again. So I hope this made some of it clearly for you. And if you have any questions about motive waves or Elliott waves in general, feel free to leave a comment, and I will happily answer your questions, because I really enjoy talking about the theory of Elliott waves and everything like that. So yeah, and I also hope you had a great day as always.